Hi folks, Nick Shaheen here. Giving ourselves a report card for the week ending 7/2. As you know, we publish ranges for the week on Friday before the week starts, and then we reiterate them on Monday morning so we can trade them. And then at the end of the week or thereafter, we look back and see where we did well and where we have room for improvement. Okay, so this is for the week ending 7/2. So the data, the way we posted it was, I'll start with the SPY. This will be the first day of the week through the Friday. And then the SPY, we said before the week started, 209 through 05 is decent band of support, so we would have written credit put spreads on them. And 210.11 is kind of a neutral area where wishy-washy. Resistance anywhere higher than that. So iron condors were set based on that information. Credit put spreads below where we think we have support, but regardless, this is 209, this is 205. So boom, bam, and then anything happened was in between. So the credit put spreads and the credit call spreads we would have scalped would have totally worked. And, you know, if you collect 11 cents here, 11 cents there on a dollar-wide spread, you get over 20% yield in 1 week. And it was an easy-peasy trade, basically, even with all the violence in the headlines. Okay, the SPX should have been similar, 2100 magnet. Depends on where you are. It's a resistance and support. Depends if you're coming at it from above or below. And then we have support below and at 75 and then 60 and at 50 and 25. Smaller supports lower if we need it, down to 1950. Resistance starting at 2125. So again, here we would have set credit put spreads anywhere below 2050 conservatively, and anywhere higher than 2125 if we needed them. Okay, what happened? Let's see. 2100, we fell apart to 2060 a couple of times. We mentioned 2060. This is ahead of the week. And then we didn't need to get any resistance. So again, credit put spreads would have paid. Credit call spreads would have paid. Iron condor would have paid based on the information. We did well there. All right, RUT, support at 1260 and 50. This is 1270. This is 1250. So support was 1260 and 50. Anywhere I say support and resistance is always like a rubber band. So if we go through it a little bit and bounce right back, that's just fine. Credit put spreads, of course, we have resistance set above, but we didn't even need it. So if you did credit put spreads based on this and hid well behind 1250, then you were okay. We have smaller supports down to 1220. We didn't need to use those. IWM should have been the same story. That's the small caps also. 126, 128 was kind of magnetic. There was a try to pin at 127 from the market, but it failed miserably there. Supports at 122 through 125, we had several bands of support. So 127 was here. Resistance at 127, that worked really well. If you set credit call spreads based on that, you won. 124, that looks like, I don't know, 123.5, 123.6. So support worked. If you set any credit put spreads below or at 122, you won. So it was kind of like a binary thing at 127, and it was decided down. So credit put spreads would have paid, credit call spreads would have paid, iron condor would have paid, this one won. All right, let's move over sideways a little bit so we can see the rest of it. What do we have here? The Qs. 108 through 10 was still a meander area, meaning bulls and bears can go back and forth. This is 108.5. This is 108. So 108 through 110. We couldn't get to 110 because of all the pressure that we had. Small support below to 105. So we had every leg was kind of a little bit of support down to 105, but it wasn't formidable. So based on that information, I would have been hesitant to do credit put spreads, but if I did them, I would want to hide behind 105. Strong resistance is 109, and this is 108.5, so we didn't even come close to that. So credit call spreads would have paid. Credit put spreads, if you're courageous enough to do them, would have paid if you were conservative enough, because it did stop at 106.5 above the 105 that we thought we would hold at. The big guy, Apple. Apple had a 125 magnet. This is 126.5. Came down to 124.5. That's 125. And then we said downside pressure from here, and it worked. And support if we get to it, and it worked. That was the 125 magnet we just mentioned. 128, 29, small resistance, stronger resistance, higher, we didn't need it. But if you did credit call spreads, you won. More support, 123 through 121, we didn't need it. So credit put spreads would have definitely paid. Credit call spreads would have definitely paid. Iron condors, which are both of those two, would have definitely paid. Google, this is the Goog L, not the Goog. 545, 555, kind of a neutral zone. Shoot, I can't see this. So this is 545. Let's consider this is 555 up here. So neutral zone. 560 magnet, but resistive. So even if we got to it, it would have been resistance. Each decent resistance higher than that. Okay, so 545 through 37 were support. 545 through 37 were support. Look at the low, 39. So we did not need to get to 37, but we had it there. And also down to 525. So we had more support. It worked. It pushed it up. Credit put spread paid. If you did the credit call spread based on the resistance, it paid. I had a similar setup for the Goog. And I said sudden interest to 505, but anyway, it did drift just like this one, but held at the support we mentioned. So overall, we have a win and a win and a win and a win and a win over there. So I give ourselves another A+, not A- this one, A+. Good job if you're following along. If you're not, you should hop along. Nick signing out until next week.